Hello, welcome to day 10 of my trading journal to help me with my learning and understanding of ICT concepts. Just a reminder, I'm not a financial advisor. This is all in a demo backtesting environment. So I'm reflecting in this journal on Wednesday. I identified two trades. The first one I didn't take, which turned out to be the most profitable, and the second one I overestimated how far the profit target should be, and came back, had to rely on my rules to get me out of the trade. I think the profit was something like 20 pips or something. So basically the morning and the afternoon PM session, only 20 pips, missing out on a really good trade in the morning. Okay, so the mistake I made was I came in here and my daily bias was strongly bullish. I simply just took one look at this. I said, okay, there's a daily fair value gap imbalance. There's the long-term high, that's sell-side liquidity. There's a 1 hour fair value gap here. I'm just going to wait for price to make a Judas move below the London lows into this fair value gap, and from there we'll deliver to the upside. Unfortunately, I completely just for some reason overlooked the weekly open again. I only noticed that after the fact. The idea being that this acts like a sort of magnet. Price will sort of move away from it, but then the further away it goes, it can keep running. But many times this acts like a magnet on price, sort of making us in a sort of discount, a premium area up here. So while maybe later on in the week price is going to want to reach here based on the weekly open, our bias should have really been either or. We should have been anticipating that maybe we'll get the Judas move and the move up, or maybe price is going to be drawn down into this imbalance. Maybe this fair value gap is the target for the day and price is being drawn to there. So our bias should have been either or, if we'd done a little bit more analysis here. So okay, I went into the Wednesday with this preconceived notion that this is just going to be sort of a staging ground for price to go higher. So this time I used the lows of the London, and since we're already above the highs of the London, once we get to the chart at 8:30, I then switched to using the highs of the PM session and using these two here as the most significant low and high overnight prior to 8:30, using that as my buy side, sell side liquidity, which is fine. That was a good start. So I'm watching this, I'm just saying, okay, I want price to come below the New York midnight open there for a discount. The morning session ticks on, we reach 9. The Judas move down never really comes. First I think this is going to be the Judas move, but then price kind of takes me off guard and it starts heading up here. Now, in some previous journals I'd said that I want price to close above for a liquidity sweep. I would not be satisfied with just one wick, because I would be expecting price to maybe come back and then make another candle above there. So that's fine. I don't recognize this as sell side liquidity being taken yet, which is fine. I keep watching price here. I'm really just waiting to see what happens here at this point before I can go forward. Okay, so price goes back up there again. And at this point I'm looking at this thinking, okay, maybe price is going to close above here and we can use that as the Judas swing. And then it makes another wick above before coming back. And if it was just one wick, well, hang on a second. So yeah, price really sort of moves away from it. At this point, the price is telling me that this is the Judas move here. We had some sort of a sort of accumulation here. That's what's happening there, accumulating sort of buyers with this sort of trend trending market. Then we get a big push up and we go above the PM session highs here with three, on three separate occasions, 1, 2, 3. And then price moved away from it dramatically and actually created a market structure shift down here. I would have liked to see it close above here, and this is actually what threw me off. I was just looking at this and saying, well, it didn't close above it, so I'm not going to use that as sell side being taken. And plus I was only looking at buy conditions at this point. My bias still hadn't changed. Once I saw this big move here, I started to consider maybe there's like a bearish breaker forming. High, low, higher, high. Didn't take us long to see this. High, low, higher, high. And since I really like using these breakers, I started drawing this out here. Go to the 5 minute, just check that we've got the last down leg and price. That's the only real time I use the 5 minute. And so price is already closed below this breaker here. What I would like to see with a breaker is that we take the sell side, we get a break of market structure, that hasn't already closed below the breaker, then an inversion fair value gap, and the only inversion fair value gaps I could see were these small little things here, and they just really didn't give me that much confidence to enter or anything. So then went through another candle. I saw this and I figured this is probably going to be the swing low now. This is probably the broken market structure. I'm not seeing any way to get into this bearish breaker. So then I'm starting to be convinced that this is potentially a short here. So then I switched to sell the 2022 model. And I start going through these. I'm still kind of questioning whether this is sell side liquidity, but I think, with the 3 wicks above the PM session high, a strong move away, which would be indicative of, price strongly moving away once it's taken liquidity. Maybe our definition didn't quite satisfy my definition here. So then we had the market structure shift, which happened here. Then we have a fair value gap within an order block. So the order block is a significant high being broken, and then the bullish candles, or the open of the first consecutive series of bullish candles. And again, if we come back out just to the 5 minute just to clean things up, these candles do merge together. So that is our order block. Then, though not a requirement, we like to see a fair value gap form very close to this order block. So we're not looking at a fair value gap down here, we're not looking at a fair value gap up here. We want one that's within this area here. So our fair value gap, where's our fair value gap? Well, this looks like a pretty big fair value gap, doesn't it? Now obviously, our stop loss would have to be too big to encompass all of this, and I still don't know if price is going to want to come back up to this fair value gap here. So then we go enter within a premium. That's the question. Fib from the most recent high, which is here. So the market structure shift low, that gives us a premium area, which for sell this would be represented by the red. So most of this fair value gap is actually within a premium here, so we want to only be using the part of the fair value gap that is within the discount. So let's just do this, fair value gap. I can only make it so small until the text disappears, so I'm just going to do that. Come in here a little bit more. Okay, so one way to look at this one might be, well, I only want to enter within this area here because price might smash through this fair value gap and it might want to reach to this one. But this is where piecing together PD arrays starts to give us a better narrative. We've identified this bullish breaker. And the idea with this is that once price properly sort of leaves this area, I mean, we've sort of closed below it just about. You know, it's permissible for price to come to within the mean threshold of the breaker. But once price actually leaves this breaker, we expect this to act as a strong level of resistance. So, you know, if price was down here, we wouldn't want to see it come back past the mean threshold. But since price is still, you know, within, you know, give or take a few pips within, operating within this breaker, you know, using a fair value gap in this discount here, or sorry, a premium for a sell, would still be valid. So we let's just check we've got all of this. Entry within a premium, which it is. We're using the earliest possible entry, which is the fair value gap, to make sure we get filled. Price is above the New York Open. It's met all of the conditions. We even have a strong possibility of price wanting to come to the weekly open, so that puts us in a premium. We also have a pretty clear picture here that price looks like it wants to at least go for the London lows, but you know, more likely it's going to want to head into this hourly fair value gap, which then supports our theory of price later on in the week going towards a daily fair value gap. So everything was lined up perfectly, but because I hadn't taken enough time to you know, basically take all this into consideration, I was kind of just skipping through the candles. Also, I didn't want to be wrong as well. We'd had so many great examples of where trades worked out perfectly because I'd convinced myself that the bias was going to be bullish, and because I wasn't, you know, completely satisfied with only wicks taking liquidity, not bodies, I basically just didn't take the trade. I just didn't take it. I just all the signs were there, and yeah, I let this one pass me by. But we can now, we can still look at the rules and say, look, there was a valid model here. Sure, you as the operator didn't follow the rules, or you didn't, you know, see the setup. That's fine, but you know, we can still test the validity of the strategy here. So I'm looking at, you know, where my target should be here. This is just based on one standard deviation from the high to the low. The low hanging fruit objective would be the London session lows. So that would be here. That would be about 47 pips. The next objective would be, would want to see price come into this fair value gap here. I mean, to be honest, I just went for something like this. One standard deviation, and I thought, let's maybe use the best case scenario here. The best case scenario is price comes and fully fills this fair value gap with a body and a wick below, and if that doesn't happen, it's fine. We've got these rules to get us out. Okay, so let's see what happens. Remember, we've got our bearish order block here. And look what happens. Price hasn't left the breaker yet, so it's still fine that it wants to come up and fill, you know, a sell side imbalance. Comes into what's left of our fair value gap, which is in, you know, the discount from the perspective of wanting to sell. Taps the order block here. You know, so that looks like it's you know, order blocks are real. We're not just an imaginary thing. Yep, okay, so well, we never actually got into this trade, so this is just sort of like hindsight now, isn't it? Okay, so price starts moving away. Now, we are strongly anticipating that price is going to, at the very least, take out this the London session lows. Okay, so price starts to stall out a little bit, and this is where it taps into the liquidity. Now it's only fair to anticipate some form of a retracement, and I'm anticipating a retracement back into this bullish breaker here. So that is permissible to me for price to come up here, because I'm looking for the next swing high. I'm looking for the next swing low that fails to break a swing low. So okay, so it looks like this is a swing low here. I mean, the wick doesn't get down below here, but the bodies do close. So if we were just looking at this without wicks, this is a swing low that closed below here. And how a candle closes is more significant than the wicks. So I mean, it's definitely something to be wary of. I guess we could say failed to break an old low. I mean, not really, but it's still a good opportunity for us to reduce our risk here, so that's fine. Next, up close candle being broken, so we could see this up close candle here, and we'll see what happens. Okay, so we get another push down. It's sort of just like a little bit of a tight range here, so we're kind of waiting to see what price does. Otherwise we could sort of say every little wick up and down is a swing high, swing low. It's not really clean price action here. Kind of need to give it a chance to see what it wants to do. Now, with the context of this breaker here, maybe we look at this and we go, oh, that's an up close candle being violated here. We should now move the the stop loss to the most recent high, which would be here. But we're still, we're so close to our entry here. I'm just gonna, say, well, maybe we just move the stop loss just enough to cover commission costs or something above this breaker. If price, leaves the breaker, then comes back and closes above the mean threshold, then, our whole theory is probably going to fall apart and we're going to be wrong. So if price comes back up there anyway, okay, good. Price taps into the breaker. The most I'd be comfortable seeing it go would be wicking into the mean threshold, but I'd be expecting to see this act as resistance, not be violated, because and plus I want to use these trade invalidated once we actually reach a target as well. I mean, there's an exception to every rule. There's a rule to every rule. I want to use this once we have once we've have like a good we've reached at least one target, and now we're just using this as a fail-safe to make sure we just don't give back profits. If we haven't even really gained any significant profits to begin with, then we're still kind of in that early stage of, the trade is out of our hands, let's just see what happens sort of thing. But, we still reduce the risk, that's fine. See, I don't know why I was so hesitant to take this trade. Like, if you took the trade and then you were wrong, we could just move the stop loss to break even and then, nothing lost. But I guess I was just worried that price was gonna, smash up here for some reason. So that's fine. So once we get that, we get still waiting for Okay, that looks kind of like a swing low here, doesn't it? To be honest, I'm kind of getting a little bit frustrated with this just noise. This isn't really price action, this is just noise. Okay, what's it going to do? Taps into the breaker again. You know, I think what I'll probably be doing here actually is just, you know, putting the stop loss here. So if price comes back up, we're still covering the cost of our commissions. Because right now we're only at like 13 pips, 16 pips. That's just not even a significant amount of money at the moment. Okay, price keeps just going sideways. I mean, I've got to admit, this would be pretty frustrating to be a part of this, actually. But in the end, it does come out of this consolidation here. And, you know, for some reason, once it reaches the lunch session, that's when all the, you know, actual volume comes in. So it smashes through our target. That's 75 pips there. You know, in hindsight, it wasn't actually the biggest move, actually. Let's see, our entry was here. Our entry was here, our stop loss was... Okay, so it was a 1 to 4. That would have been a, yeah, 1 to 4.3. So it would have been a decent trade. This would have definitely been, you know, a nightmare to sit through. So, like, you know, once we get a nice move, we've got a big profit, and we just don't want to do anything stupid, give the profit back. That's where I, you know, start using the trade invalidated rules, provided we got, you know, we understand the greater context that, you know, we want to wait to see if price comes to here. We've got the bearish breaker here. So yeah, now that I saw that, I was even more thrown off, but I did sort of force myself to actually take a trade this time. So price comes down and takes buy side liquidity. Price comes up. I don't want to take trades during the lunch session as well, so, but I would still be watching price. So get a market structure shift. Remember, this is for the 2022 buy model. We get a fair value gap and order block here. Order block significant low broken. Bearish candle prior to the rally that creates a fair value gap. So there's no fair value gap here. Down close candles, then a rally with a fair value gap. So our order block is here. So I actually did enter a trade here before I knew what price was going to do. So we're going to get to see that. Entry within a discount. That's the most recent low to the market structure shift high. So entry would have to be, you know, within the discount here. Price has to be below the New York Open, which at this point it is. So after hesitating in the morning, I decide to, you know, much smaller range, so our stop loss actually, you know, covers basically the low. There's not really any reason to put the stop loss any more than that. Really conservative target this time of 42 pips. And here's the thing, do I really want to target above the breaker? Because now to do this, I would have now having to be betting against my own previous analysis. I said earlier that the most I would want to see price go to is the mean threshold of the breaker. And then here's the previous high. So technically this is the low-hanging fruit, but as we can see, price likes to sort of hit that breaker and reject off of it. So do we really want to put a target up here? Not really, but of course I did. Of course I was like, yeah, this is now that we've had that run on buy side, now we're gonna have this. That's what I did, if I'm being honest with you. I wish I could say I was smarter than that, but I wasn't. Okay, so we have all the requirements. blah blah blah. Now we wait to see if we get filled. So I look at this, I was like, okay, I want to enter the trade after lunch is finished. So, you know, I saw that we had the wick that came down here just as lunch finished. So, but, you know, it'd be there when the risk would be the same either way. So, yeah. Okay, so price starts going up and I'm thinking, yeah, great. I was right. I'm going to make them demo dollars. Price immediately comes back down, but that's okay. I'm going to wait for the next swing high. Yeah, we're going to swing high, and I'm thinking, okay, well, look, the PM session's coming now. We're going to get some liquidity at the PM session. Okay, this is where it would have been smart to, you know, look at closing the trade once we saw price reject this breaker, but that's fine. I'm just blindly waiting for a swing high. Okay, so price starts coming back down. Okay, it pushes up past the breaker. So this was like your best case scenario here, and we had it here. But of course I don't even have the breaker on my chart at this point. I'm just looking at it like this, thinking, okay, yeah, we're just going to ride this up. Okay, we get a big move down. That's okay, maybe it's just coming into this fair value gap here. We still need a swing high. So that's obviously, I'm looking at that, I'm thinking, oh yeah, it's just coming into the fair value gap. Now technically this is our swing high here. I probably don't really see it at the time, but we've got a wick with two lower wicks next to it, a wick with two lower wicks next to it. This is technically our failure to break an old high at this point. So at this point we put the stop loss to break even, which to be fair I do, so that's, you know, at least we're not going to lose money now. And you know, we could probably just bring the stop loss up a bit just to cover the commission costs as well. Okay, so next, if a down close candle is violated, which would be here, wouldn't it? Not violated yet. Violated. So now we move the stop loss to the previous low, which is, there we go. I guess this is technically the previous low, isn't it? But we might as well just be closing the trade. So I think I might be using this as the previous low. Okay. Price has made a market structure shift low here. I'm kind of, you know, I've got my stop loss here. I'm just kind of holding out hope maybe price is about to do another big run. Okay, get stopped out. That's fine. So it was a pretty sorry day. Not really. I mean, I'm pleased that I'm able to come back here and explain it all, and you know, I think the problem was from the get-go, I was already a little bit tired. I only spent maybe about 15 seconds sort of deciding what my bias was going to be. I was just like, yeah, it's bullish. Waited for a Judas move that never happened. Wasn't sure if this was a Judas swing because of the wicks, and so, you know, honestly I just didn't want to take a loss and then have to come here in the journal and be like I took a loss. I just never actually took this trade here. I did take this trade, but rather than, you know, taking the profit at a sensible area, like at an area that ICT would say, a low-hanging fruit here, came back. At least our rules saved us though. I mean, these rules are definitely, they're definitely gonna help us. Yeah, so yeah, I think this is educational, and I think in the next session I'll I'll try and do this when I'm not so tired. Actually, spend more time. Maybe even write. Rather than just clicking my fingers after 10 seconds and saying that's the bias, maybe I should actually write out some of my sort of anticipation of what I think price is going to do, why it might do. Spend some more time in pre-analysis, and you know, I mean, even if I hadn't done that, if I had just written these on the chart here and then just dragged them into place once price started satisfying those conditions like a jigsaw puzzle, and then you'd be like, look, they're all on the chart now, what are you doing? Enter. So once again, ICT is proven right and I'm proven to be a fool. So that's all for now. Let me know what you think, and thanks for watching.